Hello, everybody. Welcome to Thursday. The S&P 500 was up almost 0.4% today. We came down on Monday with the tariff worries, and we've been coming up ever since. And the market's, pretty close to an all-time high again, within a 0.5%, actually a little less than that. But tomorrow we have the jobs report, the big one for the month before, in this case for January. So that'll make a difference. Could launch us into a new all-time high, or maybe we just fall back down a little bit again because the report is either too good or too bad. It seems like that's the weird scenario right now. Again, in a recessionary environment, you want more jobs. In an inflationary environment, you want kind of just the right amount of jobs because more jobs can create an inflationary situation. The last jobs report we had was quite good, 254,000 jobs, and that made the market fall actually because it was so high. Now here we are again, almost back to a new all-time high anyway. So a lot of times what's happening on that day doesn't really matter. For me personally, more jobs is better long-term than less. Recessions are more of an issue for the market long-term than inflation has been. We have many more recessions than we do these higher inflationary periods. I still think more jobs is okay. So we'll see how this works out. It may or may not help us get to a new all-time high tomorrow. I did say that the market might have a little bit of a hard time really, finding some direction here just because of the uncertainties, we're going to have tax cuts, regulation cuts, what's happening with tariffs and, all those types of things. So, and the main focus, of course, even with all those things said, it's just inflation and what's going on there, what the market sees. So, we fell quite a bit based on the December comments from the Federal Reserve about, not lowering rates as much as the market expected, and then we started back up again when the CPI report came out, and it was quite good. That's how it works. Again, been going sideways since mid-November. Nothing wrong with that at this point in time, too. So, but over a period of time, you do have to be careful in terms of what the market does. It can trade in a range, and that's fine. But if you keep kind of failing to hold those new all-time highs and falling back into them, you get into kind of a topping mechanism that sometimes as a pattern can be something to be concerned about. We're not there yet, but we'll see how this plays out. We're heading into a fairly good time of the year. March and April are generally positive months, good positive months actually for the market. A lot of focus is placed on money coming into IRA contributions and those types of things that happened that kind of give the market a little bit of a pop. So anyway, that's what's happening today. Not a bad day at all. We'll see what happens tomorrow. We're doing our show tomorrow. Finally, haven't done one for a while. So you can watch that live on YouTube. And I'll do a summary of what I saw happening for the whole week. And we'll talk about the jobs report and, what's happening at that point in time. So look forward to seeing you there. Thank you very much.